Hello, and welcome back to the Money Advantage podcast. Rachel and our family are taking a nice little vacation today, and so I'm filling in by myself solo. And we're going to dive into something that we've been talking about, and that's really about the human problems that people have. And we're going to dive into each one of those problems. And each one of these problems is the reason why most people fail are the biggest reasons that people fail when they try to implement the infinite banking system into their infinite banking concept into their lives because they can't overcome the human problems. And the human problems are a reflection of that person, and they probably know they have them either consciously or subconsciously. So they're looking for a simple way out, like we often do in our society. And this simple way out just doesn't exist. So if you think about the five tenets that Nelson talks about all the time, think long range, don't be afraid to capitalize, don't steal the peas, don't do business with banks. And then maybe the most important one is to rethink your thinking, because you cannot solve a problem using the same thinking that got you into the problem. And yet we continue to do that, or we think, oh, well, I can have this new magic little thing that works, and then I can overcome this, and I can, bring the banking function back in my life, and thus be in a better a better situation for my personal economy. The problem with the infinite banking concept that I've noticed over the last 17 years is that Nelson actually says it's not a sales system. It's actually a contract. And yet, because people have taken it and used it as a sales system, specifically to get out of debt, that's a really a prominent one that people use to try to sell the policies, is they tell people, oh, well, we can get you out of debt by capturing this money first before you actually pay your debt off, and then you're going to get uninterrupted compounding. They haven't dealt with any of the reasons that the person got in debt in the first place. The second thing that I think comes in is people, they get the concept of uninterrupted compounding, and that you are, every time you spend a dollar, it's not that you just have that dollar go out of your life, but that dollar and everything that you could have made on that dollar. So astute investors say, well, that's great. Then let's go ahead and set this up. Then I'll borrow against my cash value and I'll put it into an investment. But that's the short-term thinking, because they think, oh, that's all I have to do because it's my money, but they don't pay the loans back. And worse than that, they actually get policy designs that are short-term thinking, and they're afraid to capitalize because they're like, well, let's start with a really small base, a lot of PUAs. That way, if there's ever a time when I don't have the money for investments, then I only have to make this really small base policy. Or they say, I want to make a really small base so I can get a lot of cash value now and go make the investment. Short-term thinking can actually cause long-term problems. And a lot of people say, well, that's just an alarmist talking, because I've actually run these scenarios, these illustrations, which are not contracts. They're simply snapshots of time, but they don't run them with loans. And even if they do, they don't run them with loans in a changing environment, economic environment. And so those are just conceptual situations that could happen. They're projections what could happen. So behavior is much more important than policy design. I'm not saying that a very small base policy with a large PUA can't be used as long as you're thinking long range. I'm not saying an all base policy can't be used. I actually have one on my wife, and I think it's performing beautifully. But that's because our behavior about taking loans, paying it back, paying extra PUAs in a form of a additional interest to myself is only just additional PUAs, just additional premium. So the more you can pay back in additional premium, the more the policy grows and capitalizes and compounds. We often hear people say, you know, this is the thinking that people have. Their behavior is they say, what is the design? They also say, what is my cash value after 30 days? They want to know these things because they think that's the most important thing. They don't understand that their capital has a cost to it, whether you put it in as premium or whether you spend it. Both have a cost. And taking a policy loan has a cost to it. Taking a policy loan and not paying it back has a cost to it. So these are the kind of things that we're going to dive into right now, to the human conditions, the human problems that Nelson talked about in the book. Because, and I know we've talked about these several times on the podcast, but it's the most important thing in my mind after doing, over 1,000, being on teams that have done over 1,000 of these and talking to all the practitioners, talking to Nelson himself, talking to clients who have been set up policies by other people and now are looking to us to actually help them rescue it. So the first one that Nelson talks about is Parkinson's law. And Parkinson's law has a couple different things about it, but work expands to fill the time that's allowed for it. And we all do this, I believe. We have to fight this. Think about when you have a project due at work, or when you have a project around the house. You might get it started, but you're like, well, I have 3 weeks to do this. I can get it done. I know I did that in college, when I had a paper due. So we have to overcome this, that work expands to the time that is allowed. You see that in a lot of corporations. You see that in a lot of government organizations. The second thing that's related to Parkinson's law is a luxury enjoyed once becomes a necessity. And the United States is probably the most guilty country of this. When I travel to Europe, or I look at cooking shows that are based in Europe, what I always notice is that the kitchens are smaller, the appliances are smaller, and yet they're producing tremendous food. And yet in the United States, the kitchen has to be this expansive place, huge refrigerators, almost like commercial refrigerators, huge cooktops. And why? Because when you work in that situation, you're like, this is luxurious. I can do all this. So then now it all of a sudden becomes a necessity. And that's what happens with policy loans. A lot of time they don't get paid back. Is, yeah, I know I have to pay that policy loan back. However, I have this new shiny object over here that I have to have. Not that I want, but that I need. And then the final thing with Parkinson's law is expenses rise to equal the income. And you have to overcome this. And this is part of not being afraid to capitalize. So I don't know if you've had this experience before, but if you work in a W-2 paying job and you typically get a 3% raise or a 5% raise, you say to yourself, oh, well, next year I'm going to do this. I'm going to buy this car. We're going to go on this more extensive vacation, because you're going to have more money flowing into your control, but you're also then just having more money flow out of your control. So you've lost all that opportunity cost. Business owners do the same thing. They oftentimes have, a big sale or a big client that comes around that's providing more capital. And they're like, oh, I'm going to use that capital to expand because I need a tax break. Not even thinking about if that expansion is too soon, or if it's even makes sense from a tax perspective to save X amount of dollars on taxes, but you actually paid a lot more for that piece of equipment in the kitchen. So you have to overcome Parkinson's law. mainly that work expands to fill the time allotted, and that in expenses rise to income. I think those are really, really important things because if you do those, you'll have extra capital to pay premium. Willie Sutton's Law. Willie Sutton's Law is a famous bank robber who said, they was asked one time in the early 1900s, Willie, why do you rob banks? And he simply stated, because that's where the money is. And he who actually has a lot of money, those are the people that are most at risk. We've had asset protection attorneys say this all the time, is people don't get sued if they don't have money. And so where anywhere wealth is accumulated, other people are going to try to get that wealth. Now, sometimes it's not by illegal ways, such as a bank robber or such as somebody that is suing somebody. It can also be by legal ways. They're like, oh, I'm going to target this demographic. I'm going to target this zip code because they have a lot of money in that zip code. So I'm going to target that zip code and offer them a goods or service. And hopefully I can make it so nice that now they think about Parkinson's law and it becomes a necessity. So you have to look out for Willie Sutton's law. The biggest one is taxes. So in taxes, you actually the more you make, the more you're going to have to pay. And so that's the biggest thing where wealth is accumulated, that you're going to have people trying to get at that wealth. Recognizing government programs as a form of redistribution is also a way that the government looks at it and says, well, you have a lot of money over here, this group of people do. So we're going to take it from you and redistribute it to people that don't have quite as much money. And so that's something you have to look at. You have to overcome if that's a very and very important to you. Why? Because for every dollar you can save in taxes is another dollar that you could put in a place that you can accumulate wealth, tax deferred, and then access it tax free and pass it along tax free. So that's Willie Sutton's law. The next one is very, very closely related, is the golden rule. The golden rule is very similar to Willie Sutton law because those who have the gold make the rules. So now you've accumulated assets and you would like to do something with those assets, and you're in control in a lot of the situations. Now you have to overcome Willie Sutton's law, you have to protect those assets. But now you have those assets and you can move quickly and decisively on things that would benefit you in your personal or business economy. You can also have a sense of peace because you have assets that you can just sit on until the situation is absolutely right. Nelson used to always say that uh, opportunities find cash. And it's kind of like the Beetle effect that they used to talk about in the 60s and 70s, where there were so many Volkswagen Beetles um, on the highways, but nobody really would notice them until they bought a Beetle. And I bet a lot of our listeners right now are the same way. When you have a car, you notice your car on the streets and highways, especially after you just buy a different car. So that is an awareness. You need to have awareness, and capital has the same thing. As soon as you have capital, all of a sudden you have an awareness of things and opportunities out there that you wouldn't have had before. We've had clients say, I like the utilizing whole life insurance for the infinite banking concept because it mimics what they try to do in their 401ks. Because if they're paying monthly, they just take it out of their checking account automatically and ACH it into their policies, and it grows and grows and accumulates capital. And then when an opportunity comes about, they say, hey, I have capital that I can borrow against in my policy to actually go do that opportunity, whether it's purchasing something you want, a big ticket item for yourself, or whether it's an investment. So if you have the gold, you can make the rules, even to the point where you're negotiating maybe a better price or some better closing situations. Savings, so that savings actually creates financial power for you. Now, I don't mean power in a negative way. I mean power in a way that is positive in your mindset, in your emotional mindset. So, a couple things that you should probably think about on this concept is, what does that mean to you in your own words? Have you really deeply thought about this? How do you see this principle playing out in your own financial life? You probably have noticed this, where you had some capital and all of a sudden some opportunity came about. What do you need to do to overcome this? And the only way I would say to overcome it is if you're always spending your capital because somebody's told you to keep your money in motion, then you're probably going to make a mistake of deploying that capital. The next one, the arrival syndrome. And most of our listeners don't have to worry about this because they're constantly thirsty for new knowledge. And even if they have the old knowledge, they're trying to reinforce it by listening to it over and over again. I've been very, very fortunate that my family are lifelong learners, they're lifelong people seeking fulfillment, seeking purpose. They don't think about retirement. My dad's 86 years old. He still works. My mom's 83. She doesn't work and get a paycheck, but she actually works as a volunteer. She's always trying to get better and help more people. So as you're listening to this podcast, and I'm sure you're listening to other podcasts, why are you doing it? It's not because you just think, oh, I like to listen to Bruce's voice because my voice isn't all that great. You're doing it to see if there's something that you can understand and get a little bit better into your life. So, well, I don't know if you've ever thought of it, but this whole belief that, oh, I already know that, is actually a limiting factor in your life. Because once you think of whatever a person is saying or whatever you're reading or whatever you're hearing is, oh, I already know what they're talking about, then you're going to stop bringing in new information, or maybe not even a new information, but new ways of actually thinking about this. It also blocks imagination. So if you continue to thrive, to find more information and to understand more information, then that more information will then help your imagination go in different directions. And Nelson always said that the infinite banking concept was just an exercise in imagination. So continuing to strive to understand this is something I believe is very, very paramount to overcoming the arrival syndrome. And then the other thing is if you think you're already understand things, and unfortunately, this is what's happened in our political climate right now as we talk in late 2025, is we tend not to adopt new ways of thinking then because we think, oh, I already know this. I already know what the person's going to say. I can't remember who said it, but they said a saying that I've thought about a lot of times in my life is listen with the intent to understand instead of the intent to respond. Unfortunately, in our political climate right now, people are always listening with just the intent to respond because they've already arrived. They think there's nothing I can learn from this other person. I'm going to tell you why you're wrong in your way of thinking. And unfortunately, I think there's people out there in the social media world that are not practitioners of the infinite banking concept, but they try to help people practice it, that they have made claims that Nelson set a good guideline, but he was kind of old in his way of thinking. And this is the only way you should do. These are the only people, institutions you can do it with, the only companies you should do it with. These are the only designs you should use. That's the arrival syndrome playing out just like Nelson predicted it would play out. And the next one is the whole concept of use it or lose it. And it's the last one, and it may be the most poignant one, especially if you relate it back to our mind and our physical body, because financial habits must be practiced daily. Now, if you're a person that doesn't, it's not disciplined, and you don't practice other habits, whether it's your health habits, whether it's your intellectual habits, whether it's your relationship habits with God or your family, whatever habits, if you don't practice them religiously and on a daily basis, there's no way that they can stay up to the same level that you had before that day that you skipped them. Physically, mentally, we all know if you don't use these things, you're going to lose it. Well, these financial habits are the same way. And that's where I'm always amazed when a person says, well, I'm going to try this and see if it works. You're already failed, because in order for make this work, it has to become a way of life. You have to say, I'm going to stop using one financial institution called a bank to actually flow my money through, store my money, and borrow against my money to take a loan to another financial institution we simply call an insurance company. They're both financial institutions. You can both store money in them, and you can, with both of them, you can actually borrow from them. They have different characteristics, but it has to be a change in your thinking, and you have to continue to work on this. The infinite banking concept is it's not a one-time event. That's what I was just trying to explain to you. It has to be a way of life. And I've seen this over the years when a person actually implements this, or they start to implement it, and then they're pretty good at putting the premiums in for several years, and they're funding it, and then all of a sudden they're like, I've never borrowed against this. Oh, and then I'm looking at my cash value, and it hasn't grown that much. If I would have put it into the stock market, then I would have more money. That's because they're comparing rates of return now. They're not comparing it to taking the banking function in your life and eliminating um, all the finance charges in that situation. So, yes, there are some really good people that try to implement this, and they, do it for a short period of time because they're going to capitalize, and capitalization is very, very important. But what they haven't done is they haven't done it into their brought it into their banking life. And thus all they've done now in their minds is bought an insurance policy, a cash value insurance policy, which frankly, if that's all they did, that would be really, really good too. But people start forgetting the reason they did it. So these are the human problems that if you can look at them each individually on how they affect your life, not just for banking, but for everything in your life, then I think you will start to overcome the arrival syndrome, and you will start to not only use it or lose it for the banking function in your life, but for all other habits in your life. So if you would like to talk to us about this and see if we can, and you're finally, I was talking to somebody the other day and they were like, I'm just sick and tired of doing it the same way over and over. So if you're sick and tired and you'd like to talk to somebody on our team about how you can implement this, if you're ready to actually implement it and make a way of life, you can reach out to us at hello@themoneyadvantage.com. You can go to our website, themoneyadvantage.com, get on our calendar, talk to somebody, and see if this is something that you would really like to implement in your life to change it. So thanks for listening today. Remember, success leaves clues. So model the successful few and not the crowd, and build a life and business you love. Until next time, thanks for